Today we have with us Ms. Lakshmi Iyer, who is the President and Chief Investment Officer of Fixed Income and Head of Products at Kotak Mahindra Asset Management Company. She's currently overseeing fixed income onshore assets of over $16 billion and also looks at offshore assets under advisory. She has done several roadshows across Asia and has also gained recognition for the same over the years across fixed income schemes. She's also been recognized as one of the top 25 most influential women in asset management in Asia by Asian investors. So, ma'am, instead of me, I can just go on and on talking about you and your achievements. Just take us through your background and why don't you let the listeners know themselves?
So you explained it all, Chami, so I don't have much to add. Yes, I do manage money and most importantly, the trust for millions of investors across the country and across the globe. We do have offshore investors who have found favor with Indian fixed income. And it's like while they say life is a roller coaster, I would say market is a constant treadmill. So you are continuously at it, trying to grab the nuances of the market, make sense out of it, and that's how I am productively employed.
That's great. And where do you see yourself going forward with the current market situation?
I see myself, I am a die-hard market fan. So obviously, I think it's very difficult to delink markets from me. It has got into my blood, and this is a good addiction to have, I would believe, among the other vices that I have. So this is a happy place to be. I don't foresee, or I don't really wish to head anywhere, because the role that I oversee gives me the flavor of markets and also the business flavor. So I think when you merge the two together, that's the perfect way to be for Nautilus.
I forgot to mention one thing to my listeners that after going through ma'am's various videos and articles, there's one thing also which I should mention when I'm talking about her is that she's a die-hard Bollywood fan and a foodie also. So I think we're going to have a lot of analogies related to them when we are, going about explaining fixed income markets.
No, no, Jami, don't build too much of hopes, because last 10 months Bollywood has gone into hibernation because of COVID, and you know that
Yeah,
eating out also has literally come to a standstill. So I
right.
have become a compulsive cook because I need to cater to my palate, so I don't have too much of a choice.
Right, right.
Okay, that's great. And with that, we come to the end of the second segment and moving on to the third segment. So this third segment, as we said, the episode name is "How to Play the Fixed Income Wave." I would like you to tell our listeners that how could one enter the fixed income markets and what are the various instruments at our hand.
Firstly, Darshan, I would like to tell the viewers that India, by its nature, is a fixed income mindset in nature, given that we have so much of money lying in traditional mode of investments, including banking products. The mind is quite attuned towards doing fixed income instruments. The only disconnect is that when investors look at fixed income mutual funds, they try to extrapolate the same logic and assume that because it's fixed income mutual funds, it assures returns. What is very important to note is that fixed income market allows you to participate in the market potential. So therefore, that leaves open space for upside with reasonable downside protection, depending on what kind of strategy to choose. So I think when you are looking at if I give you a cricket analogy, you need to be, if you are an all-rounder, you can do reasonably deft batting, of course, but you are equally good at bowling. Or if I give you a food example, it's I don't know, at point in time people are either eating or people would have finished eating, but to suit a palate you need to have the entire spread, including the proteins and the carbs and the fats and the vitamins. So I think fixed income therefore assumes a very, very integral part of one's own portfolio, where you are owning financial assets. So therefore, if you want stability in your portfolio, I think fixed income is clearly the way to go.
Uh, that's correct, ma'am. And since you talked about the upside as well as the downsides that one needs to keep in mind, as a retail investor, once I enter into fixed markets, what are the possible risk parameters that I have to keep in mind as an amateur retail investor entering?
So the big three risks which investors need to keep in mind when they are allocating money to fixed income is interest rate risk, liquidity risk, and credit risk. When you are doing investments through mutual fund, to a very large extent, liquidity risk is taken care of, especially if you are investing in open-ended fixed income products. Closed-ended, of course, you will have the same liquidity challenge. But interest rate risk and credit risk are two sides of a coin which have to be inevitably lived through the course of your investments. There are ways to mitigate it. So, for example, if you do not want credit risk at all, you actually have sovereign gilt funds where government of India is the issuer and the underlying portfolio actually has all of those bonds. Likewise, if you say I do not want credit risk come what may, while there is not zero credit risk, it helps you mitigate credit risk to a large extent with categories like banking and PSU funds. So I think these are some of the ways where you can reduce the intensity of these risks. As I say, zor ka jhatka dheere se. But to say that I don't want jhatka at all is like saying that I bought a car, but I just don't want a scratch. So that is inevitable. So in some degree, it could be a very muted degree, I would say. Each of these risks is something which investors should be conscious of.
Okay, so when we are talking about risks and the money market specifically, we should not definitely leave out the word scam. So, do you have any ideas for the government or measures that the government can take to prevent such scams from taking place in the near future and protect the investors' money?
It is a multi-dimensional process from an investor standpoint, from a regulator standpoint, from a stakeholder standpoint, to try to be ahead of anticipating something remotely close. The good news is that systems are more, I would say, electronic driven in each of the markets, including the fixed income markets. The lending market is pretty huge, but again, there is a lot of quantitative analysis that can be done basis the data available. But even then, there could be some small things that can erupt. However, we have seen a reasonably good, or I would say great metamorphosis in the marketplace in terms of its functioning. So even miscreants, if they were to play around with the system, that tendency has diminished to a large extent. So I think you have to keep at it. You can't be like the Chowkidar, if you remember the movie Three Idiots. He could hardly see and he kept saying all is well, all is well. So you can't be that kind of a Chowkidar. You have to be a vigilant Chowkidar, especially when it comes to the markets in fixed income, because it is investing into credits and of course investing into sovereign. So I think eyes, ears, everything wide open, and it's very, very critical to do. So I think the onus is certainly on multiple stakeholders, and there is no point, gravitating towards just one individual or one entity to look out for support.
Right. Talking about scam and chowkidars, we India has witnessed the recently Franklin Templeton crisis, initially the IFL crisis. So, having witnessed all these, do you think the chowkidars of our country, along with the RBI, MPC, do you think are we being vigilant in the times ahead? Are we, staying cautious for, not to have these kind of crisis or scams ahead in the future?
See, both when you talk about ILFS and Templeton, they are both unrelated. ILFS was more of a credit event, whereas Franklin Templeton, the event which happened where they had to wind down six of their schemes, was more a liquidity-driven event, and that obviously has multiple legs and multiple entities which have to clearly, be vigilant and cautious from all ends. And as I said. The rare view driving when it comes to mutual funds, for example, rare view driving is something which investors should not do, which means looking at returns in the past and trying to do that in the future. I think these are things which investors should steer clear of, because रसगुल्ला में छाछनी जितना घोलोगे मिठास उतनी होगी, but it has its own associated health hazards, so you need to be very careful of that.
Okay, yes, that's a great learning curve over there. Thank you so much, ma'am. So we'll
But
move on
talking,
to the fourth segment. Okay, yes.
yeah, I just had one last question. Talking about the rasgulla and chashni, so it might, we all know that junk food is gonna create a health hazard for us in the long term, but there are cravings, we can't really let go of them. How to connecting it with the markets, how to let go of that greed that is there in all of us. So people today, most of us, most Indians, as I would say, are into equity markets, more rather than fixed. Just, I mean, knowledgeable ones, just because of the returns that we are getting in the stock markets as compared to the fixed income markets. But the fixed income markets do provide us a safe seat if you compare it with the capital market set. So how to find a balance between the two over there?
See, the biggest, two biggest emotions which come in the way of wealth creation or financial planning, to my mind, is actually greed and fear. Who said that if you are a diabetic, you can't have one small piece of chocolate? Instead of having a milk chocolate, have a dark chocolate. Who said if you are on a keto diet, you can't have carbs? Well, you can't have it every day, but once in a while, if you are visiting a friend, etc., I think it's okay. Who said when you are dieting, there is no cheat day? Why I'm giving you all these analogies is to tell you that there will be temptations, no doubt, even when you are making asset allocation. But you should not lose sight of the balance. I think to have that balanced portfolio, like the way you have a balanced meal, is very, very important. I like Dilwale Dulhania Le Jayenge, for example, but I cannot keep seeing that for morning, evening, afternoon, and night. A, I will lose my job if I do that, and second is I will be beaten down to death. So I think everything in moderation is absolutely fine. So even if you are little bit, I would say absorbed or sucked into greed, try to maintain the balance. I think which is where the role of an advisor comes in very, very handy. I would say that in these kind of market scenarios, the market is actually like a hedge maze. How do you navigate this hedge maze and ensure that you actually find your exit route? Entry is very easy, but exit is something which can be very, very cumbersome.
Yes, investors do need to have the right balance, but also, as the saying goes, go big or go home. They'll have to, take a certain amount of risk to get better returns over there.
Right. uh, Thank you for this segment, ma'am. We'll move on to the fourth segment now.
Okay, so I'll start with the first word, and you'll have to say the first phrase that comes to your mind. Okay, so it's promissory note.
Promises to pay.
Financial literacy.
I have to know where I'm putting my money into.
Reserves.
Bachat.
Diversification.
Have all of it. It's like a broad-based Gujarati thali or a South Indian thali. That's diversity.
Treasury.
Treasury is money.
Gold. Gold.
The Midas touch. I think it has magnetic pull across the country, and nobody wants to let go of it.
Yields.
Sorry?
Yields.
Yields are on the way down, and it will continue to remain soft for some more time.
Okay, that's one note we take away. Moving on, Bollywood.
Always evergreen. Looking forward to watch new movies, but right now restricted to only Netflix and Amazon Prime.
The last one, scam.
Harshad Mehta. We just saw that right now, isn't it?
Great, great. That's a nice roundup, ma'am. Thank you for being on our podcast. We just like to conclude with two concluding questions that we ask every guest speaker. So the first question I'd like to ask you is that many of us look up to you in the fixed income segments or in the market segment as a whole. Who do you look up to? Who's your mentor, your guide that you look up to?
So I think you are learning every day from someone or something. So markets are your best teacher, and for most of us, it's not that you know it all. So you look back into history, and fortunately, books have been written. So you read all of that. So 1992, when the scam happened. Of course, I have read about it, and when you saw the movie Scam, you realize that quite a few of the things how they really materialize. So you don't have to personally witness or experience everything, but I think reading is what physical fitness or gymming is to your physical sense. I think it's very, very important to keep. So I think I get a lot of motivation from reading, and I get a lot of food for thought by reading. And I do a lot of financial related stuff, global as well as Indian.
Right.
Okay, that's great to know. And one last question from my side is that over your 20-year long career at Kotak, I'm sure you must be having a lot of strengths as a human being and also a professional investor. So, what was that one particular strength that helped you keep going throughout these years and helped you become the investment officer that you are?
So I think the most I would say something which never dies or never died for me was the passion. You have an aspiration, but you need to keep at it to continuously aspire to reach where you are. And if you don't have passion and do what you are doing, then it just becomes like any other chore. For me, it was never TGIF and oh my God, it's a Monday. For me, it is wow, it's a Monday, and I look forward to my work with the same enthusiasm that I used to do maybe 20 years back when I was a fresher in the market. So I think it is the enthusiasm, it is the passion and the perseverance which actually continues to propel you to do bigger and better things each day. Because I do believe go big or go home. I know that. It's engraved on my wall here, but I think that's something which I heard Vijay Shekhar Sharma of Paytm talk about it first, and I quite loved it.
Thank you so much again, ma'am, for
Th-
coming over. Thank you.
Okay, take care.
Thank you.
Bye.
Thank you so
Bye.
much.
Yeah,
Take care. Take care. Bye.
yeah,
Bye.
bye.